Yo, check it out, I gotta speak the truth about the hardest working small channel in the crypto booth.
Welcome back to the CryptoFather channel. Today is the 18th of March. I found a couple of cool articles, one from CFXT, so I'm going to talk about that, and another one explaining some crypto stuff, related stuff, so I'm going to jump into that as well. Before I do, of course, we're going to look at the market cap as well as the Bitcoin charts. So let's do that right now. We're sitting at 2.7, and pardon me for my speech. I feel like I've got a frog lumped up in my throat. I think I'm getting sick, or could have some kind of cold, temporary cold. Anyway, 2.7 trillion. So we've retraced a little bit. If you notice the market cap or the trading volume has gone up. It's at 82 billion, which means a bunch of people are selling their Bitcoin. Again, Pi network is still on the trending list. Bitcoin sitting at 82,000, Ethereum still below 2,000 at $1,900, BNB at 629, Solana 124, Cardano at 69 cents, dip below the 70 cents, still hasn't made it back up to $1. Chainlink has been pumping, I think, because I think Trump put a spell on it. We've got Litecoin at $87. I think it's time to start scooping up some Litecoin. Quick look at Meowcoin, which is struggling to get back up to its quadruple 08 with a market cap of $527,000. Not all that glitters is gold, and not every motherfucker dealing in 50x leverages is a legitimate trader. Apparently, CFXT identified hyperliquid 50x leverage whale as cyber criminal using stolen funds for high-risk trading. On March 18th, 2025, which was right here. By the way, we didn't look at the charts, but so this is what the charts look like. We're still trading. Actually, Bitcoin just formed a massive red candle below the 200 MA on the daily, so that's not great. We could be seeing another retracement going back down to the lows of 76,000 or somewhere in that vicinity. So on March 18, 2025, on Chain Investigator CFXT reported that the so-called hyperliquid 50x leverage whale is not a legitimate trader, but a cyber criminal utilizing stolen funds for high-risk trading. Who knows? Maybe it's the Lazarus peeps. CFXT emphasized that there is no connection between this address and North Korean cyber activities. Okay, maybe not. Countering previous speculations, the findings have drawn attention within the cryptocurrency community as the whale's activities involve substantial leverage, raising concerns about the implications for market integrity. Talking about market manipulation and all that stuff, which we seem to be getting a lot of recently, so that's not great. I guess more speculation could be put on the table regarding this pump here. This was the pre-Trump pump, or the pre-Trump announcement pump, when everything was dumping, and then Trump came out saying that something good's coming the next day, although that's probably most likely insider trading, literally somebody from his desk or receiving the news from his desk, Trump's desk, and then throwing in a bunch of crypto into the market before the announcement came out. There's an interesting question that was posted on Reddit rather, and actually there are three questions. Can you explain to me the liquidity thing correlating to Bitcoin, and why whales try to shake people out instead of accumulating in the bear market? So if you weren't really aware of why things are happening, this question has been answered, because there are actually three questions within this one. I came up with some videos saying that if you put the global liquidity index with a 70-day delay, it correlates pretty damn well with Bitcoin's price, and it kind of does, although it still kept going up during the crash in November, so that's not quite right. With the 70-day delay, what's up with that? Also, why do people keep saying that whales are just trying to shake you out with dumps? Can't they just accumulate during bear runs and be merry? So this is like three questions, and Practical Trash answered three of the questions. Liquidity and Bitcoin correlation. The liquidity thing refers to how Bitcoin's price often tracks global liquidity. Basically, the total money sloshing around the world, measured by stuff like global M2, which includes cash, savings, etc. Studies show a crazy high correlation, like 0.94 over the long term, meaning when central banks pump money into the system, lower rates, QE, Bitcoin tends to gallop upwards as investors chase riskier assets. 70-day delay, it's not instant. Research like from Lynn Alden and others suggest it takes about 2 months for liquidity shifts to ripple into Bitcoin's price. Think of it like a slow stampede money supply growth. Then investors gradually pile into crypto. That November crash you mentioned, sometimes internal chaos like FTX blowing up in 2020, 22, or profit taking can override the liquidity trend short term, but the correlation usually holds over bigger cycles. So there you go, that's the explanation. Why the delay? Why 70 days? It's not exact. It ranges from 56 to 70 days depending on who's crunching the numbers. It's about how long it takes for macro changes, example, Fed policy, to hit markets, shift sentiment, and move capital into Bitcoin. Historically, data backs this lag. Check out charts comparing M2 year-on-year growth to Bitcoin price. It's spooky how they sync up after a couple of months. And then the answer regarding to whales and shaking out. Whales dumping to shake people out isn't about avoiding bear markets. It's a power play during any market phase. In bull runs, they might slam sell walls to trigger panic selling from retail, scoop up cheaper coins, then ride the rebound. In bear markets, they could do it to amplify fear and grab Bitcoin at rock bottom prices before a recovery. Accumulating quietly in a bear market works too, but shaking out weaker hands gives them more control, lower prices, bigger stacks. Look at on-chain data. Whale accumulation spikes often follow big dips, like early 2025 when Bitcoin hit 80,000 after a correction. They're not merry, they're strategic. Basically, that question addresses all the dips. So the presumption is that whales should be accumulating Bitcoin here on the lows, right? And of course they do. But you can, of course, when market pushes the prices up and Bitcoin goes up, there is more liquidity going into the market. You can continue making money during those times as well. Basically, in times like this here, when the sale comes in, everybody starts dumping in, whales can accumulate more Bitcoin right here. Or there's a potential, anybody, not only whales, but anybody who is in the market. If it starts dipping, but particularly if you cause the dip, if you are the cause of this dip, then of course, you know what's happening and you can reverse the trend. When everybody starts selling, when the prices begin dipping, you can begin accumulating more Bitcoin over here. And then here's another dip and another rebuy. And then that is a massive rebound upwards. Here's another dip and a possible re-entry. Here's another dip and a possible re-entry, either one of those lows here. Another dip and of course another re-entry. So during all these times, you got 1, 2, 3, and 4 instances during which accumulation can occur and whales can accumulate more, take more liquidity out of the market and take it away from retail traders and put it into their own pocket. So this is what this talks about basically. And in another news, Dan Tapiero assumes that $180,000 Bitcoin is inevitable. Macro investors and fund manager Dan Tapiero says he remains long-term bullish on Bitcoin amid a correction that has seen the flagship crypto asset fall by 24%. In a new interview on the Wolf of Wall Street YouTube channel, Tapiero says that Bitcoin could appreciate around 117% from the current level after a period of trading sideways. I always expected us to spend months consolidating around 100,000. I think we're going to chop up back and forth between 70 and 100 to digest all this news. And at some point we're going to head back up. And I have had this 180,000 target in mind for a while. I think he's not the only one. A lot of people have had the target, maybe not this one. It varies between 150 and 250,000, but this is what we are all, I think, expecting to happen. Bitcoin traders tend to cut risk leading into FOMC meetings, but key price metrics are showing a divergence. So at the start of the week, Bitcoin $82,000 price succumbed to pressure from sellers declining from 84 to 81,000 at the time of writing. This downward movement was most likely a sell-off related to the Federal Open Market Committee's two-day meeting, which takes place on March 18th, 19th. So the downtrend is most likely a hedge against possible inflation, which might be reversed as soon as the meeting is concluded or some positive news comes out during the meeting. Federal Open Market Committee meetings tend to act as market resets. Each time the FOMC meets to deliberate on US monetary policy, crypto markets brace for impact. Historically, traders de-risk and reduce leverage ahead of the announcement, and after the meeting, the press conference from Federal Reserve Chair Jerome Powell, the markets can be equally reactive. So we're going to wait until March 19th and then quite possibly see a reversal if the news is good, or another dump, a further dump if the news is bad. Today is the 18th. We're going to watch, we should be watching the price of Bitcoin and see how it reacts. We might be seeing massive dumps or massive rump ups depending on the news coming out of the FOMC meetings. And Cathie Wood, the perpetual bull, it's great to see. Cathie Wood Bitcoin to hit 1.5 million by 20,230. Holy macro, that's like we've got 20,000 more years to wait for this to happen. I'm pretty sure this was supposed to be 2030. I assume that they're looking at 2030. But of course, all this hype is just that. It's hype. It's wishful thinking. And the projections, I guess, are placed on the idea that there is going to be an inflow of $10 trillion of liquidity into the crypto market. And if that occurred, then we'd be looking at with a Bitcoin's dominance of about 53% right now. Let's have a quick look here. 58% of Bitcoin dominance. So out of $10 trillion, we'd be looking at an influx of about $6 trillion into Bitcoin alone, at which point, I guess Bitcoin, I don't know what the calculations are, but I guess would be somewhere within that vicinity, quite possibly over $1 million. Yeah, so that's probably the presumption, but of course that's only built on the guess that the $10 trillion market cap or liquidity is going to flow into the crypto market. So you know, take it with a grain of salt. Take anything these people say with a grain of salt. And some news from South Korea. Bank of Korea rejects Bitcoin as foreign reserve asset, citing instability and other factors reported. As a matter of fact, South Korea is poised to release a test CBDC. I think it's the first nation to run a test CBDC. It's scary to say the least, because Korea is being overtaken by the communists of China and Russia. And those are the fears. But now we're seeing things like that. The CBDC is going to take over South Korea, and it's quite possibly the next way that money is going to function in South Korea, which would not be great. But South Korea is going to run an experiment which will involve about 100,000 people who are going to use CBDCs in order to manage their finances throughout a certain period of time. South Korea's central bank reportedly has no plans to include Bitcoin in its foreign exchange reserves. The Bank of Korea said a cautious approach is needed when it comes to Bitcoin, citing the top crypto assets price volatility per a new report from the Korea Herald, a South Korean news outlet. The Bank of Korea adds that Bitcoin and other crypto assets fail to satisfy the foreign exchange reserve requirements set by the International Monetary Fund due to their relatively low liquidity, small market value, and non-existent credit trading. IMF is mingling in. They've tried to control El Salvador with a massive loan, and then in trying to implement regulations on how, on what could be done, what El Salvador could do with that money that they were given, by prohibiting them from purchasing Bitcoin. And despite that, the El Salvadoran president did that anyway, purchased Bitcoin anyway. But Korea has been in the pockets, in the IMF pocket, since the 80s, when IMF bailed Korea out of the recession back then. And so right now, South Korea basically is at the beckoning of the IMF and the US institutions. And so I guess this is one of the things. The IMF does not want the likes of Bitcoin and cryptocurrencies to replace its monetary policies, right? Obviously, because the IMF is in control of the monetary supply, of the money flow, and the last thing they want is for that control to be ousted by the likes of Bitcoin and other cryptocurrencies. So the Korean Central Bank's comments on Bitcoin and digital assets came as the US government takes steps to embrace the crypto crypto sector. Instead, what the South Korean central bank is going to start is the Hangang CBDC pilot with 100,000 citizens next month. So they decide to skip out on Bitcoin, to not get involved in Bitcoin, and they are pushing for the implementation of CBDCs. And so this is the trial test run that they're going to do. Participants will be able to convert their bank deposits into tokenized deposits for payments at local shops, according to a local report. This is the scary thing about CBDCs. This pilot named Hangang is expected to involve 100,000 participants in 7 major local banks, including KB, Kunmin, Shinhan, Hana, and Woori Bank. When the BOK issues pilot CBDCs, participants can convert their bank deposits into tokenized deposits to pay local vendors, including convenience stores, coffee shops, supermarkets, and online shops. According to the report, the maximum number of deposit tokens an individual participant can hold in 1 million is 1 million Korean won, which is about $689. Participants can top up their 1 million won deposit token limit to a total maximum of 5 million won. Participants will also be able to convert their tokenized bank deposits back to into cash. And this is the thing about CBDCs. They're completely programmable. They're completely controllable. So a CBDC could be managed in different ways. Imagine if the entire country was running on CBDC. So instead of paychecks, instead of cash, payments in Korean won or whatever else, people will be getting paid in CBDCs. The thing with CBDCs is that there can be limits placed on how much of it an individual holds, on how much an individual can spend within a given month. Basically, it creates a monthly allowance. It's a federal or government allowance that is issued to all citizens of a country that has installed a CBDC system. There can be limits put on where that CBDC is spent. Right now, only a certain number of places will accept these CBDCs, and certain places can reject the exception of these CBDCs. So for example, if you get paid in a CBDC, and that's your monthly allowance, right? You've received your paycheck in CBDCs, but you are not allowed to purchase certain things because they don't accept it. And if that's the only way of if that's your only capital that you have is in CBDCs, and you no longer have access to Korean won, then you are being regulated by the institutions on how you can spend your money. And it's scary because that removes any type of control, personal control over your personal finances. Additionally, the scary things, and I know this is like conspiracy theory, but there's a lot more that can be programmed into CBDCs. Things like an expiry date. So you could possibly be given a number, your number of CBDCs for the month, and if you don't spend all of that money, all of the CBDCs by the end of that period, then it vanishes, basically eliminating any potential savings that you could accumulate. Also, having CBDCs might limit you from accessing cryptocurrencies. That's another form of control. You may not be able to purchase cryptocurrencies because the banks, like the likes of the Bank of Korea, may not want you to do it because IMF is installing these rules and regulations permitting people from trading cryptocurrencies because they see it as a threat. And I almost guarantee you that while they're doing this, the employees, the bank employees, are stacking up on cryptocurrencies because there's nothing that's preventing people from holding the cryptocurrency assets in Korea. There is no legislation on the likes of conflict of interest and stuff like that. None of it's there. So that's Korea. So that's where we are. So this is a little bit scary, and I guess we're going to have to wait and see where this is going to go. Hopefully not entirely downhill. Do remember to pick up a Descent wallet, the only cryptocurrency wallet that will keep your crypto safe. If you don't want to fall victim to CBDCs or any other IMF regulations, store your crypto on a wallet. Don't store it on exchanges because exchanges can be locked down at any minute. If government of Korea decides that Bitcoin is banned, the exchanges will have to shut down, and all the crypto that is on them will have to be converted back to CBDCs, quite possibly, rather than Korean won, and that's all gone. So send all your crypto to a crypto wallet, to the Descent wallet. Pick it up right now with a $30 discount if you purchase one of them. If you purchase a bundle of two, you can get a $99 discount on these pups. They're fantastic wallets, get them now. Thank you for tuning in, for supporting the channel. Make sure to hit the like, subscribe to the channel, and I will see you in the next video tomorrow. Have a fantastic, today is Wednesday. Have a fantastic hump day, and I'll see you on Thursday. Peace.